For the last 4 decades, the global financial system has relied on the petrodollar as a key component to uphold the US dollar's reserve status. This system is operated by oil-producing countries selling their products to the US and other countries using the dollar. The profits were then reinvested in dollar-denominated assets and markets, which helped to support the USD as the world's reserve currency, thereby bolstering the US's standing as the financial superpower. However, recent reports have indicated that Saudi Arabia is currently in negotiations with Beijing to price some of its oil sales to China using the Yuan. If this were to occur, it could potentially bring an end to the petrodollar's dominance in the global petroleum market, as predicted by S&P's Potts in his latest note. This shift would not only mark another movement of the world's top crude exporter toward Asia, but would also be a direct threat to the US financial system, which has taken advantage of the reserve status of the dollar by printing as many dollars as needed to finance government spending for the past decade. Based on the report, it appears that discussions regarding the pricing of contracts with China using the yuan currency have been sporadic for 6 years, but have recently picked up steam. This speed increase could be credited to the way that the Saudis have become progressively disappointed with the well-established security arrangements they have with the US that have been set up for quite a long time. In particular, they are annoyed with the US's absence of help for their contribution to the Yemen nationwide conflict, as well as the Biden organization's endeavors to come to a concurrence with Iran concerning their atomic program. Saudi authorities have straightforwardly communicated their shock and disappointment over the abrupt US withdrawal from Afghanistan in the previous year. It is important to note that China is a significant buyer of Saudi Arabia's oil sends, representing over 25% of their complete deals. If Saudi Arabia were to begin pricing its oil in yuan, it could bolster China's currency and pave the way for it to become a global petro-yuan reserve currency. Many investors recognize that if there were to be a significant shift, it would have extensive implications. However, it's important to remember that the vast majority of global oil sales, around 80%, are conducted in dollars, and Saudi Arabia has exclusively traded oil in dollars since 1974, when they reached a deal with the Nixon administration that included security assurances for the kingdom. It seems that the Saudis are shifting their loyalty away from US security guarantees toward China. It's worth remembering that China had taken steps in March 2018 to make its currency, yuan, universally tradable. However, this didn't disrupt the dollar's stranglehold on the oil market, since most oil exporters still preferred to trade in USD. Nevertheless, as Potts have also pointed out recently, the use of dollars has become a risky business for China. The US made rules to punish Iran for trying to make nuclear weapons. They also made rules to punish Russia for being a part of the Ukraine invasion. This has been pointed out as a significant issue. The current change in diplomatic relations should not come as a complete shock. There's been some recent buzz about China's sustained efforts to build and maintain a strong partnership with Saudi Arabia. This thing has been happening for a while, and China seems to care about it a lot. These efforts have included providing assistance in the development of ballistic missiles, offering guidance in the establishment of a nuclear program, and investing in projects that are near and dear to the Crown Mohammed bin Salman's heart, which, as the city of Neom, a planned metropolis. Concurrently, Saudi Arabia's rapport with the United States has been deteriorating during President Biden's tenure. During his campaign, the president expressed the opinion that the Saudi kingdom should be shunned as a result of the murder of journalist Jamal Khashoggi in 2018. According to US intelligence authorities, Prince Mohammed, who is allegedly responsible for the murder of Mr. Khashoggi, declined to participate in a conversation last month between President Biden and King Salman of Saudi Arabia. Moreover, the financial ties between the US and Saudi Arabia have been waning, with the US presently being one of the main oil makers internationally, which is an extreme shift from the 1980s when it imported a great many barrels of Saudi unrefined petroleum consistently. These days, the US just imports under 500,000 barrels each day as of December 2021. On the other hand, China's oil imports have flooded in the beyond 30 years, consistent with its growing economy. In 2021, Saudi Arabia was China's biggest raw petroleum provider, selling 1.76 million barrels each day, trailed by Russia, which sold 1.6 million barrels each day, according to information from China's General Administration of Customs. The situation has seen a significant shift in recent times. There have been changes in the way the US interacts with Saudi Arabia, while China has emerged as the leading global importer of crude oil. Consequently, China is providing many appealing benefits to the kingdom. A Saudi official, who is well versed in the talks between the two nations, stated that China has been offering a wide range of attractive incentives. This official also pointed out that they now understand why Mohammed bin Salman was not responding to President Biden's calls. Everyone knows that the United States doesn't like the changes Saudi Arabia made to how they trade oil. A high-ranking US official expressed concern over the idea of the Saudis selling oil to China using Yuan, labeling it as volatile and aggressive, and stating that it's unlikely to happen. In the past, the Saudis have entertained the idea of making this change, especially during times of strained relations with Washington. However, they might decide not to do it because it could have a big impact on their economy. The Saudi currency, the rial, is currently pegged to the dollar, and converting millions of barrels of oil trades from dollars to yuan on a daily basis could have unpredictable economic consequences. Saudi Arabia might be getting ready for a time when their money's connection to the US dollar isn't important anymore. This could mean that they are planning for a future where they don't rely on the US as much. By conducting more oil sales in yuan, the Saudi economy would be more closely linked to China's currency, which has yet to gain popularity among international investors due to Beijing's tight controls. Nevertheless, selling oil in a less stable currency could harm the Saudi government's financial prospects, depending on the number of oil sales and the price of oil. Some economists speculate that moving away from dollar-denominated oil sales could help diversify the kingdom's sources of revenue and even lead to pegging the rial to a basket of currencies like Kuwait's dinar. Overall, the decision to make this change would depend on various factors, but it could be viewed positively as an effort to deepen ties with China. Despite the fact that Saudi Arabia intends to continue conducting the majority of its oil transactions in US dollars, there is a gradual shift occurring, which could entice other producers to price their Chinese exports in yuan as well. China's principal sources of oil include Russia, Angola, and Iraq. Economist Gail Luft, co-director of the Washington-based Institute for the Analysis of Global Security, who co-authored a book on de-dollarization, stated that the oil market, and therefore the whole global commodities market, serves as an insurance policy for the status of the dollar as a reserve currency. He warns that if that block is taken out of the wall will begin to collapse, and so the pieces of the endgame are falling into place. As per Luft's opinion, Russia is denying the Western world much-needed resources, leading to increased commodity prices. Meanwhile, China is quietly taking advantage of the Western scramble to secure resources at any cost and approaching non-Western clients who are rich in other resources, offering them a new product, the yuan. Beijing is now actively and aggressively pushing to dethrone the dollar as the global reserve currency, and Russia is its silent partner in the effort. An anonymous international relations expert from Beijing has provided commentary on Saudi Arabia's interests in joining the BRICS group. The expert believes that the US had intended for Saudi Arabia to follow its directives, but the situation has shown that the US may have overestimated its influence. The analyst, who also suggests that the US is self-centered in its dealings with Saudi Arabia and that Saudi Arabia joining BRICS indicates growing independence in its diplomacy with the US. The expert also notes that joining BRICS would benefit Saudi Arabia's energy interests directly, rather than simply being a tool for others to use. By joining BRICS, the Middle Eastern countries may be encouraged to strengthen their relationships with the group, which could ultimately reduce US intervention and influence in the area. Li Xiaozin, the head of China Institute for Arab Studies at Ningxia University, as of late expressed to the Worldwide Times that the ongoing oil for security arrangement between Saudi Arabia and US ought to be reconsidered because of the changing worldwide scene. The Center East stands firm on a conspicuous foothold on the planet, as it is a huge wellspring of energy for Europe, and it has grabbed the eye of Russia and China, the last option of which has laid areas of strength for out with the district through the Belt and Road Initiative. However, Lee claimed that the Saudis do not feel that they are being threatened as equals in the framework led by the United States. On a separate note, I would appreciate hearing your opinions on the possibility of petro-yuan gaining traction. Please share your thoughts in the comments section below.